Just like that, we are back live. Welcome back to Benzinga Live, everybody. It's Monday. You know what that means. They decided to open the markets back up on Wall Street. Maybe they should have just kept them closed for a little bit today because everything, and I mean everything, is in the red today. Let's go ahead and get the show started, and we'll do a checkup on the trades when we get back.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
So I said everything is down, pretty much everything. I don't even know. Is there really a ticker that's just drug? How do I not know this? Is there really? Oh, there is. Holy shit. Bright Mind Biosense. Is this a psychedelic play? Up 156% today. Let's see. Let's see what this company does. Yep. Focused on developing novel transformative treatments for the neuropsychiatric disorders, epilepsy, and pain. The company has a portfolio of next-generation serotonin agonists designed to target neurocircuit abnormalities that are responsible for difficult to treat disorders such as resistant epilepsy, treatment-resistant depression, PTSD, and pain. The company's drugs have been diagnosed to potentially retain the powerful therapeutic aspects of psychedelic and other. All right, so what is this news? Okay, so last week, Bright Mind says no material events fueled rally. So it looks like they're saying, hey, there's no, good data that we've gotten, no, good trial results, nothing really to speak of, no material events. The stock just went up, and let's go to a daily chart here so we can see the actual move. Let's see. So stock went from about $1 to $2.50, so that's up 150%. Another 100%. It went up to it went from $1 to like $5 in a 2-day span. Dropped back down. Now trading back up 150% today. Again, no real news here. Bright Mind Bioscience shares are trading after the stock continues to seize momentum despite the company last week announcing it is not aware of any developments that would explain the recent surge. So I mean, look, this is as clear cut as you can get. Right, other stocks, if you're AMC or if they might try to come up with some reason to explain the rally, make their company look good. At least Drug is coming out and just saying, hey, there is no reason for this. Maybe people just like the ticker. Maybe people think it's funny and they're going out and buying it. I don't know, but the company is coming out and saying, hey, there's no material reason. There's no actual reason that this stock should be trading up this much, but it is. So if that's, what you want to, invest in, a company that's saying, hey, we're up and we don't even know why, right? It's like, I don't know, this might date me a little bit if we have any younger viewers out there, but for anyone my age or older, maybe especially if you grew up in the United States, I don't know if you guys remember Sanjaya from American Idol. Right, vote for the worst. So basically, context, because I get notes sometimes from my producers that if I reference something on the show that maybe not everyone gets, maybe I should explain it a little bit. So Sanjaya was this dude on American Idol who was terrible.
Yes,
Sanjaya, he was terrible. He was awful, and they kept voting him through. So American Idol was like a singing competition, like X Factor here in the United States, and every week he kept getting voted through to be on the next week, even though he was terrible. That's kind of like this stock.
You just dug up a nugget there.
That's kind of like this stock.
Seriously. Wow.
The vote for the worst. Like, the stock's pumping up. They're coming out and saying themselves, hey, no reason our stock should be up this much. So for that reason, I'm staying away. If you want to try to trade this to make some money, I mean, it's still only a $3.10 stock. Be my guest, but I'm just letting you know that if you're buying any stock that's up more than 200% from its moving average over the last, 6 weeks, you're more than often not going to get burned. So, but good call out, whoever dropped this in the chat, because this one, I was not paying attention to. Again, very small company, only a $14 million company. Pretty much the definition of a penny stock pump and dump. Let's go over to the overall markets because it's been a doozy today. I mean, nothing really going well if you're bullish right now. If you're bearish, if you've been short, if you've been adding to your short positions, today feels pretty good, right? I'm on the 5-minute chart here on the Qs. You can see right here, and we opened at about 9:30. Took a big sell-off, down about 0.3% there. Okay, hold on. Rohan, do you mind? Rohan, can you check and make sure your mic isn't on over there? Apparently, we're hearing some outside noise. All right, so basically here on the Qs, you can see we took that sell-off off the open, pretty much just straight down from there, found some base at 315, took another leg down from there, hit lows of about, 315 flat today, back up now 315.85. I mean, again, it's if you have a crystal ball right here to determine, is this the start of a reverse of a trend, and now we're going back into kind of, not bear market in the definition sense of, bear market means we're down 20% from a recent peak. But when I'm talking about if we're reversing trends, going back to kind of bear action where we're down seemingly every day or down, 3 out of 5 days on the week, maybe the S&P closes with a couple red weekly handles in a row. If you have a crystal ball and can determine that's what's happening here, we're reversing and we're going to move back lower, then you can make a lot of money. And there's an, saying out there about how, real money is made in the bear markets, both on the short and long side. Because if you think about it, if you're buying, like the famous Warren Buffett, if you're buying when others are fearful and you're buying when the market's down 20%, whatever, and then the markets end up coming back, your returns are going to be better than if you're just, averaging in as the market's going up. If you buy while the market's down and the market reverses, your returns are going to be better than average. But it's also on the downside, because if you go short here, right, and the market does go off another 5-10% on the Qs, you have multiple things working in your favor, right? Depending on how you go short, right, you can obviously just sell the stock outright. You can sell the Qs outright, and as the stock goes down, you make more money. But if you're buying puts or something like that, especially if you're buying puts to hedge, and then the market goes down, what's going to happen is the VIX is also going to shoot up, and it's going to increase the value of the implied the implied value of those contracts. So again, I mean, I think a lot of people who maybe have been bearish, right? We talked about where does this rank in terms of, kind of hated rallies. Like I remember summer 2020 kind of coming out of COVID when we were basically getting back to where we were at in the market before COVID in just the span of a few months. People were, perplexed. People were upset. They were like, why is the market, and here I'll go back to where I'm talking about, because this might jog some memory. So all right, so COVID crash happens here. I'm on the Qs. We dropped 30% pretty quickly, recover that within, from late March to May. So within like 6 weeks, we're back up to where we were. And then here from May to August, the market, the Qs went from 240, which was the previous all-time high, to like 300. And people were essentially like, why is the market going up? We're all working from home. Half the economy is closed. We're dealing with COVID. We don't know how bad this is going to get. And that was a pretty hated rally, I think, for multiple reasons. One, because, there were people that got caught short in there. Honestly, myself included. I had made a lot of money shorting the market. Well, actually, I wasn't still short up here in May, but what happened with me is I shorted the market before COVID crashed it, seeing what was going on with the coronavirus around the world. Made a lot of money, here around mid-March when the market was at its lows, but kept it short as we, reversed right here into April. But people were still short here. And you also, the other aspect of people who they're not short, but maybe they're not participating in the rally, right? They saw that stocks already got back up to previous all-time highs during COVID, and then the economy's half closed. Maybe they were scared of buying and they weren't buying it, and they see the market going up every day, so it's upsetting. And this one kind of, this past couple weeks kind of reminded me of that. A lot of people saying, we're in a recession, you know, inflation's out of control. Why is the market going up? And just really upset about it. And that's why, you know, we talk about all the time. I talk about with David Green, talk about with Rob Roy, like why it's so important to take your emotions out of trading, because if you let your emotions permeate your trading philosophy and what you're doing on a day-to-day basis, you're going to be more tied to those convictions and those directions you're calling. So if you're bearish and you're letting that play into your emotions, you're going to be upset when the market's going up. You're going to hang on to your call more than you would if you were just like, hey, I'm just every day, analyzing the price action and analyzing the data, and I'm willing to, change my mind essentially every single day. And that's what we need to be able to do, especially in these sorts of markets, right? Because none of us know what the GDP number is going to be on, the 25th, or how the Fed's going to respond to that. And if you say you do, you're lying to yourself. All we can do as investors is make predictions. I mean, at the end of the day, that's even what Warren Buffett and Michael Burry and Cathie Wood are doing. They're making predictions based on the information they have available to them. So based on the information I have available to me right now, I have no reason to really believe that this isn't just part of a healthy pullback in, look, so we're looking at weekly candles here, the Qs. Go back to mid-June. It did kind of feel like we hit a point there where you had some, well, you can't turn off your emotions, Greg, what I would say. And I mean, I'm not, maybe I should bring on some sort of, not trading psychologist, but someone who maybe better understands that. I think Chris Capri is someone who speaks really well to, being kind of a Zen investor. I would say, instead of thinking about it, saying how do we turn off our emotions, because that's, impossible. I would say let your, let yourself be open to your emotions and just be understand like where they're coming from or why you have them. Like, I'm personally more bullish than bearish than I am right now, but like emotionally, I don't think I'm really attached to either side. I think it's. So yeah, I mean, I would say just try to understand them. That would be like the better way to look at it rather than turning them off. Yeah, let your freak flag fly. As Born to Be Free says. That's actually a tough thing to say. Tough tongue twisters. If you guys want to drop a, it's Monday, we can try to make our Monday more fun. If you guys want to drop a tongue twister you want me to try to say in the chat, let me know. As long as it does, as long as it's not like a trick one that's going to try to get me to say something bad. What up, Dylan Carson in the chat? Dylan, every time I see your name, I want to say Dylan Carlson. That's a player on the Cardinals, who's actually pretty decent. All right. So we checked out the Qs down today, SPY down today, but I mean, your tech has been your laggard for the day. Your Dow Industrial Average only down. I'm saying only down about 1.3%. That's a pretty significant move for the Dow. So if anyone's got any individual stocks they would like to check out, Apple's been one that we've been watching. You got Apple. Let's go to our news feed real quick in Pro and just see if we've gotten anything in the past few minutes. We had a lot of downgrades today. I hate. It's not a great sign to wake up on a Monday. The market's down, and people are downgrading a bunch of stuff. She sells seashells at the seashore. That one's not that hard for me. She sells seashells at the sheet. Oh wait. No, I just said it wasn't that hard, and now it's getting hard again. She sells seashells at the seashore. Yeah, I got that one. JD's is trading Boyle. This is the inverse natural gas ETF from, or actually not the inverse. This is the ultra share. So you have Boyle and you have KOLD. Lord Byron saying, one smart feller, he felt smart too. Okay, I see it. I see what's going on here. One smart feller, he felt smart. Two smart fellers, they felt smart. Three smart fellers, they felt smart. Say it 3 times fast. I can't do that. All right, too many tongue twisters in the chat today. You guys got me. That'd actually be a good way to warm up for the show. Do some tongue twisters. Alrighty, y'all. I do see our first guest of the day hanging out backstage. We've got my man Nicholas Brown coming to us live from Pittsburgh, Pennsylvania. Let's go ahead and bring Nick on, see what news he's been watching today. I got to get my headphones on or else I won't be able to hear him. Boom. There we go. Just like that. Let's go ahead and get him on.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
Mr. Nick, happy Monday.
Good morning. Happy Monday.
Yeah, we can still say good morning for about 12 more minutes, and then it's afternoon.
Yes. So I think do we just want to say it right now so we can get it out of the way and get going?
Yeah, let's go ahead. I'll let you take it away. I don't want to steal your thunder.
Okay. So guys, after a while through talking, some personal news here is I am going to be interning here at Benzinga. So I am very grateful for this opportunity. Me and Aaron and the Benzinga team. Aaron has been talking with the Benzinga team, and so today I'm officially able to announce that I am interning here at Benzinga. I'm grateful for this opportunity. Still a lot of details to be sorted out, but just wanted to get that out of the way here. And so just to let you guys know that I'm the new intern here at Benzinga. You can reach out to me via Twitter. You can reach out to me through Aaron. So very excited for this opportunity here to take this right before I head back to school. So even though I may not be appearing here on Benzinga every day during school, that does not mean I'm going away. I'm going to be doing a lot of reporting through Twitter, through the Benzinga Pro feed. And so you can still catch me on Twitter. I still will try and make an appearance here on the Benzinga show throughout Twitter, but just throughout school, I should say, but just wanted to let you guys know that I'm the new intern here at Benzinga.
Yeah, and I'm super excited about this as well, Nick. Obviously, we've been impressed with not just your willingness and ability when you come on the shows with me to hang out, but also just with your work you've done on your Twitter, not just recently, but really over the past few however long you've been doing it, a couple of years. So we see you as someone that we're very excited to have on the team, someone that we're excited to help grow your audience on Twitter, your on-camera personality, all these things. So again, exciting as you go into your year at high school. You've got some exciting personal news to share with your friends.
Yeah, and I mean, I'm looking forward to it because you guys are in Detroit, I'm in Pittsburgh, and so we're still connecting via Zoom, and I'm excited for this. And so I was just talking with some friends here and saying that after-school activities, they are going to be a little hefty, but no, I'm very excited for this to up my reporting a little bit, maybe getting to write articles, not just reporting through Twitter, getting to write articles and a lot of detail. And so I'm so excited to look forward to this and very excited we were able to announce it today because I do go back to school on Thursday, but so excited for this.
Yep. And I'm excited for we're going to figure out all the details. I know obviously here on the show, we'll figure out some things for you to help with, even if you're not able, like you said, during school to come on every day. And then also on the news desk side, I think that's where a lot of your skills and where you could be a real asset are on that news desk side. I mean, your knack for finding those headlines that are truly important and finding them in a fast manner is something that we are all about here at Benzinga.
Yes, and I mean, look, just because, like me, I woke up a little bit late today. Normally I'm up at 5:30, 6 o'clock, ready to go through, looking through headlines, looking through Benzinga before the bell here. And I was a little bit delayed today, but hey, I still got the news out for you guys. I'm still getting stuff. But no, Benzinga Pro, guys, is very good. I mean, I think we need a Benzinga Pro app, Aaron. I think that's what really I want too. I would love a Benzinga Pro app. But no, Benzinga.com with all the writers over the weekend. They covered you guys throughout the weekend on Bed Bath & Beyond. AJ coming in with the story. I didn't know about a letter through July 21st or June that Freeman wrote, and I read it over the weekend through AJ, through Benzinga. So they are committed to you guys, and I'm excited to be part of the team.
Awesome. All right. Well, let's go ahead, and since we're talking about headlines, I'm curious. You mentioned Bed Bath & Beyond. What else has been, on your radar over the past few days, really over the weekend?
Yeah, so today we got some Ford news, we got some Pfizer news, we got Anthony Fauci news. So let me just start with, we had AMC and the APE with the diverse shares. We saw that launched this morning, and it's been halted about 6 times. There is a difference between AMC and APE. APE is the new, the new diversified way for the new accommodating shares with your portfolio. So there is a difference between APE and AMC. There was some confusion this morning, but AMC was actually up this morning ahead of the APE debut with Adam Aaron and the AMC team, but then quickly reversed it. Last I checked, it was down near 30-some%. Meme stocks have been all over the place because of the Bed Bath & Beyond. We got news late Friday night that some shipments have been halted to Bed Bath & Beyond, and some credit people are pulling out, not rating Bed Bath & Beyond. And so we're just waiting for some clarity here with the CEO. What's going to happen with the company? Is the company still going to be in business? Because we heard about these shipments being halted. There's a lot going on that we're not sure about with meme stocks and Bed Bath & Beyond.
Yeah. I mean, and really across the board today, I mean, I was checking out all the different, actually, I think Bed Bath & Beyond, I mean, at least compared to AMC, was hanging out. Actually, now it's not, down 10%. Shoot. But it was funny, like looking at like the 5-minute chart here. I mean, you can see that here at 10 a.m. when we were actually trading, it was pretty flat, but now since then has had a pretty significant sell off. So here in the past 2 hours or so, Bed Bath & Beyond stock has dropped almost 15%. Wow, it's incredible.
Yeah, I mean, it's just a very complicated story. We're still seeing Wall Street bets. We're still getting details out because I didn't know there was a letter issued with everything through Benzinga that AJ wrote over the weekend. And so I was trying to explore that a little bit. But not only to that, I mean, with this new AMC APE shares, I'm still not comfortable, trying to do this split here. Do I trade AMC? Should you trade AMC? Should you trade APE? What this new accommodating class share is? We're just really going to have to see, because it was halted, I think, 6 or 7 times this morning, right as it went public. It's been very volatile. So meme stocks, I think this week alone, because of that debuting of the APE share with AMC, I think meme stocks are really going to be closely watched this week. They are going to get a lot of volume, in my opinion. I think they're going to be trading heavily up to the upside or to the downside, depending on what the news comes out and what Wall Street Bets says. I think that's the community driving a lot of this, and so we're going to have to really watch how this plays out.
Yeah. Again, we'll always be watching the latest developments in the meme stock craze. Today, not a great day for those meme stocks. What about, you mentioned some Ford news, Nick? Why don't we hop over to Ford real quick?
Yeah, so Ford, there was a new report out from the automotive news. They broke it, and Wall Street Journal is confirming, Ford has confirmed to the Wall Street Journal that it's cutting about 3,000 jobs, primarily in the U.S. and Canada. Ford notified workers of the cuts Monday in an internal email, and Wall Street Journal is reporting Ford says cuts are effective September 1st, began notifying affected workers on Monday. It's just coming to show that as supply and demand continues to erupt, as supplies continue to be limited, and we have these supply chain issues, and a lot of these automotive stocks and a lot of companies are trying to see how they can save money because of what they're losing out on supply. We're seeing a lot of cutting of the workers, and now Ford is the latest to come out saying that they're cutting some positions. So we're going to have to really watch, because if Ford does it, what about Lucid? What about Rivian? What about Tesla? We have to see about these other EV companies. And so we're going to have to really watch this to see how this plays out.
Yeah, and I mean, we've already gotten some announcements. I know Rivian announced some layoffs, or at least some hiring freezes a few weeks ago. So across the board, I mean, it seems like not just these high growth tech companies, but now even we had Walmart announcing it was laying off certain, corporate workers. You have Ford announcing layoffs. It's getting to the point where I mean, if you were really bearish here, you've been saying we're in a recession, you can look at these things and say, hey, look, now so-and-so's laying people off. Now so-and-so's laying people off. Don't you think this is going to be reflected in the market at some point? I mean, what do you think? Where do you think people stand from a macro standpoint on just hiring and jobs right now?
Yeah, and I mean, there's so many reports out saying that the job market is growing. I mean, we're at all-time lows because of how many jobs. But then we have the people arguing, oh, no, we're in a recession because of the jobs market. So we're really going to have to watch this. I think there was a new report out of the Wall Street Journal this morning, if I'm not mistaken. Carl Quintanilla from CNBC shared it. Trying to find the tweet here. It was something about hiring, and it was interesting. Oh, yeah. The 350,000 restored jobs expected this year would be more than 50 times the 6,000 jobs restored to the U.S. in 2010. They're arguing, I mean, at this point that jobs are coming back. But, it is very important to know because we get another jobs report before the September meeting. We get another CPI, PPI report. So there's still a lot of time before this September meeting for the Fed to see what they really say on the jobs report, because I really think that's a key point here. Whenever they make the projections, they always point to the labor market. And so I'm eager to hear what they say on the new reports on the latest jobs market throughout the summer, because they do skip that August meeting, what they thought of the August jobs report, and when they meet in September, what they thought of the September jobs report. I think the jobs market for them is a really key piece of cutting the rates or continuing to rise them. So we're going to have to really watch that closely.
Yeah, and I do think we have jobless claims that come out Wednesday before the open, so that will definitely be, something that we got to look at, and then as well as GDP revision the following day. So some economic, headlines coming out this week. Of course, that Jackson Hole event too. Nick, do you know off the top of your head when that is?
Yeah, so Jackson Hole, I believe, is Thursday, Friday. Reuters reported on Friday that Fed Powell was speaking. It is confirmed 10 a.m. Eastern time. So he's going to be speaking. There's a lot of Fed speakers that we're going to have to watch through. But no, Federal Reserve Chairman Jerome Powell is speaking Friday morning at 10 a.m. There's already more calls out on the street. Vital Knowledge over the weekend, they're reiterating a 50 basis point hike. And they see Jackson Hole being an important event to see what Powell speaks to. But we're going to have to really watch Jackson Hole, because I think the comments that the chairman makes is really going to be market moving, because that's going to show what's going to happen in September, what's going to happen leading ahead. So we're going to have to really watch that too. And with the interest rates, I think Israel or another bank just raised interest rates. So Thursday night, I believe it kicks off 6 p.m. or 7 p.m. The Jackson Hole event officially kicks off. But Chairman Powell will be speaking 10 a.m. Friday morning.
Yeah, and I mean, it's interesting because I think, right now with so much uncertainty in the market, both from a standpoint of, overall macro, these numbers, whether it's GDP or employment, and people are still wondering, are we in a recession? Are we heading to a recession? Are we already out of a recession? Were we never in one? People don't know. And people are looking to the Fed for kind of this, guidance to say, like, okay, should we, if the Fed's going to remain hawkish and be focused on fighting inflation, maybe the markets, are going to remain choppy or continue to come down versus, okay, the Fed's going to see inflation coming down in a lot of senses, and maybe they can, maybe not raise rates as quickly or as drastically as they thought they originally needed to. But I think, and personally, if I were in charge of the Fed, which obviously I'm not, I think right now you have to express that uncertainty. Like, and Jerome Powell's done so. Certainly, I think the last time he spoke, he, reaffirmed like, hey, we're going to be data dependent here. As the data comes out regarding inflation, regarding unemployment, we'll allow that to influence our decisions. And right now, people are like, because of all this uncertainty, looking to the Jackson Hole event, saying, okay, well, we'll know more now here after this. And I'm saying, I don't know if that's necessarily the case. Like, Jerome Powell might still say, hey, we, from what we can see, we see inflation coming down, but that's not going to convince us that hasn't convinced us that we're done dealing with inflation. And I don't think he's going to say anything that's either super hawkish or super dovish. He's not going to say, oh yeah, we're cutting rates back to zero. He's not going to say, yeah, no matter what, we're hiking rates up to, 4%. Like, I feel like it'll be somewhere in the middle ground.
Yeah, because even though inflation is coming down, we have this story on oil prices. Friday they were back up. Now today they're back down. Oil is going all over the place. That was the main driver for inflation in June and July, but it come down in July. And so we have to really, the chairman and the whole panel is really going to have to see what's going to happen with oil prices. Are they going to stabilize? Because just because oil prices come down doesn't mean all inflation is going to come down. We saw food going up another 10th, and so rent going up. So we're going to have to, the chairman's really going to have to be very careful, in my opinion, with what he says, because it's either going to be hawkish or dovish. And we have a lot of Fed speakers that are on the line. I think there is a CNN, or I think there's a Fed speaker, I don't remember who tonight, that speaks at 7 p.m. or 6 p.m. or 7 p.m. tonight or sometime this week in a Q&A, and they're already calling 50 or 75. But I mean, I think the chairman is really going to have to be careful on what he says, how he addresses inflation, how he addresses oil prices, how he addresses the September meeting with what they do. Are they going to go 50? Are they going to go 75? Hey, for all we know, they could go 100 because they are trying to get back down to 2% inflation. And 2% inflation is a long way from here, in my opinion. I don't see them cutting rates as of yet, because there's already reports saying that they're going to cut rates next year. I think it's going to be a while before they cut rates because of how high inflation is, and as they're committed to the 2% inflation.
Yeah, and I mean, right now, oil, like you mentioned, I just had the XLE pulled up, which is the Spider Select sector fund for energy. So it's not going to be, an exact, USO would, either way, we could do USO, which is your United States Oil Fund, or XLE. Both the charts look pretty similar, not exactly. But basically my point was, a lot of times you see oil and oftentimes like energy in general acting as sort of a counter-cyclical asset. So here in the chart, from March to June, the USO or XLE, whichever one you want to look at, is going up, while the overall market, while the S&P 500 is going down. And then right here in June, when the market started to come up, USO starts to go down. Well, we'll go back to XLE for a second, just because it does a better job of exemplifying my point. Once here you had once you had XLE come down, now you're actually seeing them trade somewhat together. And here's the reason why, is because here, when you had oil coming down, here's where actually people started, in some cases, pricing in a recession, or pricing in the demand for oil and gas really falling, and that being part of a recession. And here's where you had economists start to predict that, this recession's here, and the Fed will be forced to pivot in early 2023. So because essentially, all right, the recession's coming, there's going to be less demand for oil. Now gas is coming down. Now we're seeing the Fed potentially pivoting, is what economists were saying. Then the market turns around. But now you're seeing, and what I see as a case where the oil could continue to come back up if we avoid recession fears, because people are saying, okay, now, there is going to be demand for oil. And the S&P overall market could come up if we avoid these recession fears, if the soft landing looks possible. If it's a hard landing, then oil is probably going to keep moving down.
Yeah, and I mean, it's very volatile, and I think that's going to be the main focus, because, as I said, oil was at like 92, 95 on Friday, and then today we're crashing again. Brent too, and so Mike Zaccardia, he said 84 is a key level here, because I really think that's going to be the main driver. I mean, gas prices finally let up in my area. They came down another 4 cents. We're down to 4.25 from being halted, from just being, staying at 4.29. And it all really depends. Nobody really knows. I mean, there's more news out of Russia that they're shutting the pipeline in I think it's Nord Stream 1 again. They're shutting it towards the end of the month, if I'm not mistaken. There's just so much volatility here that nobody really knows, and I can't predict. I don't have the golden ball to say where we're going. But remember, from JP Morgan, they said, and I still have this pulled up, and I'm still remembering it, they said that oil could possibly go to $380 with the stratospheric and everything going on. We're still hearing calls that on the street from different banks that oil could end the year above 110, 120, 130, and even into next year, they don't see prices coming down. It's all over the place because of how volatile oil is and how it trades daily. Sometimes it's up $2 in the earlier session. By the time we close, we're down 3, 4, 5%. it's just so volatile. Nobody can predict it. And I really think that's going to be the main watch for the Fed whenever they meet in for Jackson Hole, what they say on oil prices, because that could be a mover. Whatever he says, it could possibly drive markets. It could possibly drive the 10-year. It could possibly drive oil markets. Nobody really knows.
Yeah, I mean, whatever he says is pretty much guaranteed to move the markets in some way. I just am not very convicted that he's going to have going to have any headlines or tone that's can really be construed as either really hawkish or really dovish. I think if I had to predict, Powell is going to maintain, some sort of really just try to reaffirm the fact that they're being data dependent right now, going to be kind of nimble, being able to be open-minded about their next direction, because they can't. And again, if I had to guess, because he won't want to seem too dovish or anything, we'll say, hey, just because we've seen gas prices come down and we've seen some commodity prices come down, doesn't mean we're done dealing with inflation, right? I think that's going to be something that's reiterated, and then maybe the market takes that as somewhat hawkish. Oh, the Fed says they're committed to fighting inflation. That means these rate hikes are going to come. When maybe or maybe not. Maybe they're just saying, hey, inflation's still our main goal right now. Things are looking good, but that's still our main goal. I have no clue. I would just be shocked if we come out of the Jackson Hole event saying, okay, yeah, Powell was super hawkish or super dovish.
I mean, every Fed speaker that we hear that's on the wire, that whenever they make comments to CNN, to this network or whatever network, the main headline is either 50 or 70. There's two main headlines, actually. 50 or 75 in September, and we're committed to bringing inflation down to 2%. That's literally the headline that literally catches everybody's attention, because they continue to reiterate that they say that that's going to be their main inflation. But if it is, then why didn't you? I mean, the question is, Aaron, too, why didn't they go 100 in June or July when inflation was roaring? They went 75 and then 75 again in July. Why didn't they go 100? There has to be some explanation why they didn't go 100. And I'm hoping somebody presses Powell on that in Jackson Hole, saying if inflation was so high and you guys are so committed to bringing inflation down to 2%, why didn't you guys go 100 in June? Why didn't you guys go 100 in July, or 100 here or 75 here, or split it up? Why did you do 275s instead of going 100 when many people on the street, Jim Cramer, some banks said we could expect 100? Why didn't they go 100? That's what I want to know.
Well, I think, I know I'm not going to answer that question for them, but I think a lot of economists and probably a lot of people that the Fed's, a lot of research the Fed's doing is, I don't know if, or they would say that maybe, probably a lot of numbers and data they crunched said that it wouldn't have made a difference, going from 75, it's not like that extra 0.25% would have brought gas prices from, $4.50 down to $3.50 overnight, right? Like those problems, why gas was that expensive was more of a supply side issue, and raising rates an extra quarter point wouldn't end up doing anything. So just because Jim Cramer or some people on CNBC think the optics of that looks better, at the end of the day, that might not actually do anything or be counterproductive. Slow down investments into those spaces, hurting things on the supply side even further. And I mean, you had even U.S. elected politicians, Elizabeth Warren, one of them, kind of speaking out against the rate hikes in general, saying they have literally no data to prove that this can help inflation outside of driving a recession. And then you have to be honest with the U.S. people, with the constituents, and say, hey, we can fight inflation by raising rates, by doing this. We know we can, but that will bring a recession, bring a manufactured drop in demand. And then you would have to, I would want to ask the people, hey, which would you rather have, potentially get laid off, a big recession, or, continue paying 10% more for gas and food? And it's a very tough decision, and that's where the Fed's at. So I think it's not as simple as saying inflation was really high, they should have gone 100 over 75. I'm more in the camp that it wouldn't have mattered. I don't even think that right now, right, gas falling and stuff, I don't even think you can 100% equate that to interest rates.
I mean, we also have to, I would also to add on to that is, if we're going to continue to say one day we're in a recession camp and the next day we're not in a recession camp, that's like S&P forecasting. If you're going to make a projection, stick with it. Why are you going to change it 100 times because one data piece tells you to do one data piece says we're not in a recession, the other says we are in a recession? I mean, economists here, I mean, I've seen so many notes and they continue to pour out daily. One day this economist is in a recession. Oh, wait, the next day, I got to back up my case here. I don't think we're in a recession. We're seeing so many economists and so many people change their theory on why we're in a recession and why we're not in a recession daily. It's either we're in a recession or not. Nobody really knows. The NBER is going to, I think, 6 to 12 months before they even tell us a recession, when the recession's even over. But I mean, it's just to the point here. Nobody on the street really knows what's going on. And that's why we continue to see daily performances of, yes, this stock is going higher, this stock is going lower, or major averages were higher, but oh no, these the traders and investors are back in the recession camp here. There's a lot of unknowns here, and at this point, we need to just pick one and stick with one, because continuing to be in the I was right on, the line is I was right on, I told you so line is getting bored, is getting overdone with, or I told you S&P was going there. No, you didn't. You officially forecasted 45, but when you say S&P is going to 43, I was spot on. Let's parade around that. There is so much nonsense that we have to cut through here, and it's either you're going to stick. It's either we're in a recession or we're not, and whatever your S&P target or whatever your target is for something, stick with it. Not change it a million times and say every time it changes, I was right on. I was spot on. I told you so.
Yeah, and I mean, that's why, I mean, I think, again, to the Fed's credit, not to the Fed's credit, but I guess, and I've talked about this before, just kind of it is a in between a rock and a hard place here. I would want, I wouldn't want, if I were them, to try to make that prediction about recession or not, because I mean, even with, the past 2 quarters, right? Even looking in the rearview mirror with the numbers of the past 6 months, it's still debated among economists. So if you're talking about the past being a debate, if it was a recession or not, like then what's the point of even talking about the future? So I think, I mean, look, bottom line, again, if the next quarter GDP is positive, right, it's going to be an interesting, discussion, because it's like, all right, then if the next one's positive, then it's going to be like, all right, then we had 2 negative ones and we were either in a recession for those 2 quarters, and we were out of it the third one, and it was the least impactful recession of all time. It was a recession where we actually added jobs. However you want to construe that. Or, okay, the third quarter is positive. Maybe we weren't really in a recession the whole time. Maybe productivity just slipped a little bit, and really, recession isn't a great term for it. I don't know. Maybe it's a bigger debate about the definition of the word recession. Bottom line is, my point is just, I don't think the Fed really benefits or gains anything from trying to predict if we're in a recession or not.
No, and I mean, I think the Atlanta Fed, because I just downloaded the app now, Economy Now, they have the Federal Bank of Atlanta for the GDP now. I mean, we're currently, this was the latest estimate as of the 17th of August. It says third quarter is 1.6% down from 1.8. I think it was as high as like 2 or 3% as soon as Q3 started. I mean, it's all over the place, and it's a great app because they have a lot of macroeconomics, and Federal Reserve Bank of Atlanta has its own app, and it's breaking it down from the website too. But I really think too that these estimates are all over the place because they're factoring in everything different. I think even though the quarter, how they do GDP, I think there's a lot of these estimates that go into, and so that's why we're seeing some say 1.6 in a latest one, some say 1.8, some say 2%. I mean, I'm really eager to hear Q3 GDP because I really think that's going to set the tone. Is it going to be positive? It's going to be negative. If it's negative, then the bears come back out saying we're definitely in a recession. And if it's not negative, the bulls come out and say, we told you so, we're not in a recession. I mean, it's a we told you so, either whatever party you are on, a recession camp or not. It's the I told you so line that's going to come out either way.
Yeah, maybe, or maybe if it's positive and the bulls come out and say we told you so, maybe the bears say no, we were still right. That was a recession. Then you turn around and say, oh, okay, I guess that was the weakest recession I've ever seen in my life, but it was a recession nonetheless. All right, Nick, any other stock specific news here? I want to turn it over to the chat to see if anyone in the chat has any trades or any stocks they would like to check out.
Yeah, so there was the news this morning that euro falls to a level last seen in 2002, eclipsing the prior 2022 low. That was interesting. Saudi minister says oil futures disconnect may force OPEC plus action. OPEC plus may need to tighten output to stabilize the market, Saudi minister says. And also to the point, watching some Macy's this morning, watching some Nvidia, some Peloton, as they report earnings, Salesforce, Dell. So we get some earnings this afternoon from Zoom. I'm watching Zoom, Palo Alto, Nordson. And so there's some earnings that we're watching. I think Macy's, as I think we round off the week, Macy's to see back to school, is clothing shopping going to go. I think that's going to round out retail earnings. Retail earnings, I don't want to say they were good. I don't want to say they were bad, Aaron. I think they were iffy on some storefronts, because some beat expectations, some destroyed expectations, and some came in on the lighter side. I really think it all depends on where you order your products, what you're seeing on your supply chain, what you're seeing on foot traffic too. So you can't really say it was a bad retail earnings season. You can't really say it was a so good earnings season. I would give it a C plus to a B, in that range, that it was okay, not the best. Maybe we would see some improvement as we head into Christmas, Thanksgiving, as we head into the second half. We could see better earnings, better expectations too.
Yeah. And like you said, the retail. Wait, I don't know. Andy O is saying, can that not be true though? I don't know what. Oh, was it back to the recession thing? Saying, can that not be true, though, that we were in a recession for two? No, I'm saying that can be true, that we were in a recession for 2 quarters, and then if the third one is positive. That's what I'm saying, is that I don't think people will say, oh, yeah, you guys were right, we weren't in recession. They'll say, no, we still were. And I'm saying that could be true. But, again, if that is true, then if you have, like, that 6-month period, right, 2 quarters, where it's a recession, but also in that same 6 months, right, you like added jobs and all these things, then it's like, okay, call it a recession. If that's what you want your definition to be, fine. I'm not going to argue about like the definition of a word. That's silly. You can just go back and forth doing all the day. But what's like the connotation of recession? What does recession imply, right? Like unemployment, layoffs, like overall broad downturn for the economy, which isn't really how I would describe the last 6 months, right? I wouldn't say our economy has been booming the last 6 months, but my point was more, again, and this is all hypothetical, if the third quarter is positive, and then we want to call that 6-month period a recession, and then 3 years from now, if you're talking about like, oh, the recession of 2022, it's like, oh yeah, you mean the one where we added jobs, right? I just don't think the connotation of the word matches like how we would associate or what we would associate with those 6 months. But who knows? I mean, there are people that got laid off in the last 6 months. Just more people got hired. So maybe if you're part of that group that got laid off, it does feel like a real recession. I don't know. I just know, if we brought Nick, we're both young. Yeah, just say it's a weak recession. Right. All right. That's fair.
Yeah, we can end the debate there on a recession. If it was a weak one. If we're not, I don't know what to say, because, things are still high. And so whatever you classify as a recession, we'll just say fair. It was a weak recession to end the debate there.
Yeah. All right. So back to Macy's. What I was going to say is, like, you were talking about the earnings being iffy. And definitely, and maybe even worse than iffy, but because you had these lowered expectations going into it, I think a lot of these companies that have kind of, even if their quarters weren't as great as a year ago, because the expectations were lower, a lot of the stocks have done well. I think Nike. Wait, did Nike report? Or Nick? Who are the big retailers that have already reported?
Home Depot, Walmart, Target, Lowe's. Let's see here. I think those are the major retailers. We had Estee Lauder, Foot Locker. If is retail, but I mean, Walmart, Home Depot, a lot of the names have reported. Something interesting here on Macy's that Jay Woods typed out in the Drive Wealth weekly report on Macy's. It says the stock is traded higher after 6 of the last 8 earnings report and consistently surpassed analyst expectations. So I just wanted to point that out here. Is he's implying that one, it's beaten a lot, 6 out of 8, and it's consistently surpassed analyst expectations. So maybe this is a hint that Macy's is the outlier and is actually going to beat, or it could miss. Again, it all depends on how much money they were spending because of employees too. If they laid off any, we may get that. Depending on products, if they overbought, or how much inventory they have, if they had to buy extra. We're going to have to really watch, because Macy's, I believe, is the last one to report for the earnings, for the retail earnings. And then we move to Nvidia and Peloton.
Yeah, Nvidia always reports pretty late. I'm not really sure why, but Macy's, as you can see, I mean, we're getting low. We're getting some kind of close to the 52-week lows here on Macy's. And this was a stock that back in November, when the market was kind of touching all-time highs, Macy's got it to about $38, trading below 19 now. So a huge drawdown in Macy's over the last 9 months or so. This is surprising to me, or maybe not surprising, but this is interesting to me, I think, as a potential trade, because it's like I won't trade it into earnings, but either the earnings are going to be decent and the stock responds well because the bar is low, or the earnings are going to be really bad and the stock comes down a little bit further. And I don't really know. Honestly, I don't know. I don't have an edge, I don't think, in the retail space. But Macy's, to me, is a name that will continue to be around. But maybe not. Maybe between online shopping and no one going to malls anymore, maybe Macy's is a name to stay away from. But definitely one that, I think other stocks will move off of the earnings report.
Yeah, but it's very interesting too. Macy's, Yahoo Finances does this graphic, and you can go on it regarding analysis. And last check, I have it up here right now. Currently for estimates, so for the current quarter, July 2022, year ago EPS was $1.29. High estimate for this quarter so far is 93 cents. Low estimate is 70 cents. Average estimate is around 85 cents. And revenue, for high estimate for this quarter, $5.6 billion. Low estimate, $5.34 billion, and the average estimate for this quarter for revenue is $5.49 billion. And how would that compare? So as analysts think, as they go into the next quarter, and the next quarter would be October of this year for revenue, and the current quarter for the whole of 23 and 24, there's some good estimates here, but I'm eager because this average estimate here shows that earnings and the revenue would be coming down in October. This average here for number of analysts has 11. For revenue estimate for October of 2022, $5.16 billion. So it looks like some downtrend here that we're really going to have to watch. And it just may not reflect on Macy's. It may reflect on a lot of other companies.
Yeah, no, 100%. All right. Well, Nick, we've only got about 5 more minutes here. We've got our next guest joining us at 12:30. Here's where I'm going to let it over to the chat. Looks like Ray wants us to check out Mullen. Any other news headlines we would like to discuss while we got you on?
Yeah, so economic calendar for the week. Tuesday, we get new home sales. Wednesday, durable good orders. Thursday, jobless claims. And real GDP revision Q2 at 8:30. Friday, personal consumption, and then at 8:30, and then University of Michigan's consumer sentiment at 10 o'clock. I think that's going to be the big one, because there were some reports out of here from Bloomberg estimates for the inflation. 1-year break inflation has come down. We're going to have to watch that, because I really think the University of Michigan sentiment survey is going to give some expectation of how inflation is coming down. And, just to watch, but no earnings. We got Zoom tonight after the bell. Is that company still growing? How are they doing in this work from home environment or back to the office? So we're going to have to watch that. We get Peloton on, I believe we get Peloton. Thursday, Thursday, Nvidia on Wednesday, and Macy's tomorrow. Yes. So we're going to have to watch those companies. and much more. And if you guys go to Benzinga on their Twitter feed, they put up their earnings calendar for the week, which is always a great one to check out.
Love it. Yeah, I'll pull that graphic up here in a few seconds. Nick, always a pleasure to get you on, man. Yeah, I'm excited for this week. Like you said, it's maybe not the biggest week in the world in terms of economic data or earnings, but between the two of them together, we still have a decent little news week. So exciting things to look forward to. Of course, that Jackson Hole event at the end of the week that will have a lot of investor attention and eyes on. But yeah, man. So what's your personal schedule like? You start school back up next week or the following week?
No, I actually start school Thursday this week. So gearing back. Back to school shopping's done. Everything is ready. But I actually have my own news that the uniform that I need for school is actually on back order because of supply chain issues from School Bells when we went a few weeks ago, 2 to 6 weeks. So I actually have my own personal news saying my items that I ordered, they're on supply chain issues. They're on back order.
So you don't have to go to school till the uniform comes in?
No, I mean, I have ones from last year that I have, but, we always ordered a few extra ones. But, I mean, supply chain issues are happening everywhere, even though we ordered enough ahead of time. I just talked to a friend on the phone yesterday saying they ordered some uniforms beginning of June, right before we let out of school out of last year. And their uniforms that they ordered for this year just came in last week. It was almost another month and a half. So supply chain. So if you guys have to order anything, order them as soon as possible because the wait time continues to pile up.
100%. What was did you go back to school shopping in person or all online?
No, we had to go back to school shopping in person to get fitted because I grew over the summer a little bit. And so we had to figure out the details. And they were out of a lot of things. School Bells near me, it was for pants, for shirts. They only had a limited supply in my fitting. So that was so good because all their racks and shelves are just empty. And we asked, do you have this? I said, oh, no, that's on back order. Give it a few weeks. Do you have this? No, that's on back order. Give it a few weeks. And so they had limited supplies for certain schools. And they said 2 to 6 weeks for a lot of items or more. I mean, I heard somebody out in the checkout saying, can I order this? And if I do, how long? Possibly up to 3 months.
Wow. So, yeah, I was just curious if you went to any like Target or anything, just kind of what that gut check was, like super slammed, not as busy as you would expect.
Target, I would say it was pretty super slim. They're doing some renovating at my Target. I mean, half the parking lot's taken up of like shipping containers because they're renovating it, I believe. But no, it was packed. They had most of the items on display. They had TVs were going. I know a lot of people are buying TVs. A lot of people buying new coffee things, new coffee mugs, coffee pots. Those are wiped out at last check. So a lot of items are going quickly. A lot of people are going back to shopping, back to school shopping, back to home shopping. But no, people continue to go spend. So I don't know where the spending recession is because spending continues to be on an uproar here, at least in my neighborhood.
Yeah. Well, again, Nick, thanks for coming on today. Good luck at your first day of school on Thursday. If we don't see you till then, we'll have to talk off air about scheduling some things and figuring out how we want to get rolling on this. But again, man, always good to get you on. I'm going to go ahead and throw your Twitter in the chat for everyone to go follow. Again, News by Nick on Twitter. Definitely worth a follow on there.
Yes, thanks, guys. So excited to be part of the Benzinga team. Continue to look through for Twitter. Excited to do this. And just because school's starting, hey, we're going to continue to roll with it. And, looking forward to it. I'm just so excited. I don't know anything else to say because this is going to be my first official intern. And so really looking forward to working with you, Aaron, personally, as I've been on the show 6 or 7 times. Looking forward to work with everybody, AJ, Luke, and a lot of other people. And so if I didn't mention you guys, I'm sorry, but very looking forward to this.
Awesome. We're excited to have you, Nick. Again, our newest intern, Nick Brown. Go ahead and give him a follow. News by Nick on Twitter. Nick, we'll talk soon.
Yeah. Thanks, Aaron. Thanks, everybody.
No problem. All right, guys. Yeah, exciting stuff there. Nick's a great kid. Go ahead, like I said, follow him on Twitter. Always up to date with the latest stock market news there. Will be should be a fun internship for him. Young kid, get some work under his belt. All right, guys. Quick, rundown for the rest of the show here. In a couple minutes, I'm going to bring on my good friend Jake Wujastic from TrendSpider. Gonna run through some charts with him, see what Jake's been watching. So if you're, more on the technical side, or you want to check out some charts, definitely a good segment for you. And or if maybe you're terrible at it and you want to, you're curious just what the charts of your stocks look like, we'll take a look at them as well. Other headlines. For the day, we basically mentioned with Nick all the things that people are kind of looking forward to this week, but really just expecting some increased volatility ahead of Jerome Powell's talking at the Jackson Hole event. AMC, kind of one of your bigger stories of the day. Outside of that, pretty quiet day on Wall Street. Let me know in the chat, what you guys are watching. What about what happened over the weekend? So in sports news, for any soccer fans, football fans out there, United States had a big weekend. No, not the U.S. men's national team, but in the English Premier League. So Leeds United defeated Chelsea 3-0. Big upset. But why, the U.S. headlines, the head coach for Leeds United is an American, basically like the real life Ted Lasso. I don't think he was actually an American football coach, but he's an American dude, coach for the Leeds. And then the first goal scorer for Leeds United actually stole the ball right from Chelsea's goalkeeper. I was going to say his name's Bronson Arroyo, but that's not right. It's something like that though. It's like Brandon Aronson. Really, kind of a weird name. From New Jersey, scored the first goal. So that was cool for U.S. soccer fans. And then some more local news for me. If you're a baseball fan, Albert Pujols, prime Albert, back in action. Hit home run 692 over the weekend, 8 away from 700. So really, a lot of seam heads, a lot of baseball fans over the next month or so. We'll be watching to see if Albert can break that 700 mark. In other Cardinals news, Yadier Molina left. So I'm curious what the chat thinks about this, because this has been very divisive, very controversial among baseball and Cardinals fans. So Yadier Molina is the catcher for the Cardinals. Been there about 20 years. Absolute rock star. Everyone in St. Louis loves him. Everyone in majors knows how good he is. What just perennial all-star, regarded as one of the best catchers of all time. Played his whole career with one team. He left the team this weekend to go to Puerto Rico, where he's from, where he's even an even bigger deal. Like, he's probably the biggest celebrity in Puerto Rico. It's probably like, there's probably a couple rappers or singers, and then Yadier Molina is like the biggest athlete. He left to go because he owns a basketball team there, and the basketball team was playing in the championship. The Cardinals are playing too. Like, he basically just let this team do this. I think it's fine. Some people are upset about it. What does the chat think? Is this good? Is that okay? Is it bad? So again, basically the Cardinals were playing here in the United States in Arizona. He left out of the country in Puerto Rico to go watch the basketball team he owns play in the championship. I think it's fine. I think once you're somewhere for, 15, 16 years, you can kind of do what you want. But some people are upset about it. And that was talking sports. So those are your sports headlines for the weekend. Now, time for our next guest. From sports to charts. We're going to bring on, drum roll please, Mr. Jake Wujastic, hailing from the great state of Colorado. All right. Wait, hold on. Before we get started, Jake, I got to address some things in the chat. I may have screwed something up. Wait, are you sure? I don't think Puerto Rico's in the U.S. I think you're thinking of Costa Rica, bro. Puerto Rico's a different country, I think. Or no, it's a territory. You're right. Well, it's not in the U.S. I don't know.
Well,
or maybe it's...
me?
No, well, kind of. I was just talking out loud. I just try to not get things wrong on the show, right? So if I was wrong about that, then I gotta correct it.
It's a territory. Yeah, I mean, it's not in the U.S. It's its own island, but yeah, no, it's a territory. They use U.S. dollar and all that.
Cool. Yeah, I've never been. Would love to go. Love to
Yeah.
go. Jake, how are you? How was your weekend?
It was good. It was good. Nice and relaxing for the most part. So can't complain, and just kind of seeing some follow through in the markets from Friday. So just kind of seeing how that will play out. We did have a pretty epic run. So at this point, is this just a little bit of a pullback from profit taking, or is this something maybe on the bigger side of things? But for now we're just kind of entering this gap zone. Last week we were kind of discussing pretty much so that was Friday, Thursday, Wednesday, Tuesday. So we were kind of discussing things up here last week. We're definitely nearing the apex of this ascending rising wedge. So generally these do have a bearish statistical bias, meaning that if you look over years of data on these, generally they do tend to have a higher than 50% rate to the downside, breaking to the downside than the upside. And that's kind of what we saw. But as always, we had to see price action confirm that. You can really get burned if you assume that something that's supposed to be bearish or something supposed to be bullish is going to be that. So in this case, this did follow through kind of right how you expected, just this being typically a bearish setup. And then, pretty much 2 days of really big moves down, which, the market did need a little bit of a breather. But, at the same time, we now have a gap above. So we had the gap below that fills right around 413, but now we have a gap above that fills, in the 420, lower 420s. So, we'll see what happens. You mentioned that Jerome Powell speaking this week. So, naturally the markets are definitely going to, kind of probably be a little bit of risk off going into that, but also just profit taking. So for now, I'm just kind of watching this 413 area, which is that gap below that would fully fill around there. And there's actually, one more gap here.
So kind of the question you posed is how essentially I started the show today, was talking about, for the most part, and I guess the third option here is you could believe that we're just going to be, chopping straight sideways for a little bit. But for the most part, people either fall in two camps right here, that, we got overextended. Maybe we're even going back to the bottoms we were at, or the lows we were at in June, and this reversal is part of a bigger downtrend, or this is just a healthy pullback in this uptrend. And so a lot of people, it's kind of polarizing right now. A lot of people think like, okay, yeah, see, this is this is what we've been looking for. Bears out there might think, again, we might come back and test those lows. But what to you, Jake, would be the sign that, is it falling through these moving averages? What's your sign that this is either just a healthy pullback, going to maintain the uptrend, or a bigger reversal?
Yeah. So first things first, I just quickly turned on this gap detector. So this kind of automatically finds gaps in price on TrendSpider. So you can see here that we are filling this one. You also have a couple below, in the 379 area, and then you have another one down here in the 369 area. That'd be quite a move down from where we are now. And just a lot of this is you just got to take price action day by day. So in this case, for me, I would kind of just start anchoring volume weighted average prices from, these important points. So, starting from here, this is a pretty important pivot, July 14th. So kind of create a volume weighted average price from this point. And then from there, I would pretty much take this pivot here, which was a test of the support zone, or actually kind of created the support zone. And you can see here that we're right at this VWAP here. So pretty much the July 26th pivot here, that VWAP is holding pretty well. So, if we start breaking down through both of these VWAPs, then I definitely think, we may be on a bigger move to the downside. So you can see here, pretty much around 414.50 is where we bounced so far today, which is literally right at that VWAP. If this breaks down, then your next VWAP is around 406. And then, from there, I guess you could pull out the VWAP from the actual capitulation low here on June 17th. and that would be right around 394. So if all of these start breaking to the downside, then yeah, things may get interesting. But for now, it does seem like just a little bit of a pullback. One thing I'd mention here is on the weekly chart, you did have just kind of a perfect rejection. This is a broadening wedge. So you just get that terminology from the highs and the lows kind of diverging, creating this broadening formation. And with the highs hitting lower highs every time, that's what makes it a descending broadening wedge. So for now, we pretty much just got rejected right at this area from last week. This is interesting because the Qs tried to break out of this the previous week. We talked about IWM kind of already breaking out of this area a couple weeks before. So the S&P 500 was definitely lagging the Qs and IWM. And so, I would, if you were to kind of try to get an idea of where we may kind of end up bottoming out, I would definitely start looking at IWM, because simply IWM was your leader since we bottomed, and now could be something to watch as a continued leader. If we start reversing on IWM, that may be good for the markets. And same thing here. I mean, at this point, you're just filling some gaps. So turn the gap detector back on. You have this gap right here that we kind of just gapped over, interestingly enough. So, there was this gap, and we pretty much made another gap right here. So I would say if we can fill this gap above, then, could be just a pullback. But, for now, I would say that just start using your VWAPs from these kind of these pivot points. So same thing here, July 26th pivot, start a volume weighted average price. We're kind of trying to stabilize a little bit here, but for now, I would say definitely keep an eye on the gaps on some of these indices. So IWM, you only have this one gap here, but on the Qs, on S&P 500, you do have some lower, but you also have a few gaps higher too. So it's just one of those things where you just got to see where price action goes from here. And if you're trading the markets, you have to have some type of bias, right? Because you have to have, if you're going to take a position, you have to have enough confidence and bias to take that position one way or the other. But at the same time, try to just remain neutral and look at some of these main areas. On the Qs, just using horizontal levels right here. This previous high from June acted as resistance. It acted as support. Now it may act as potential support moving forward, going into this week. But as long as oil doesn't just absolutely blasting, you would assume inflation is going to kind of remain maybe stable or maybe even dropping a little bit. So we'll have to see.
Yeah, I think that's where a lot of a lot of kind of the more like bullish sentiment is coming from, is the fact that at least if some of these other numbers aren't great, at least inflation has fallen. But I mean, right now with like some people, there's a million different ways to do technical analysis, a million different indicators. People that love Fibonacci's will do like Fibonacci retracements and say, all right, a 20% bull run, you'll expect like this much. Do you have any sort of like rule of thumb on that? On like if we go up 20% in 2 months, like what do you consider a healthy drawback? Is it 5%? Is it 10%? I don't know.
I mean, a lot of people just got like a 50% retracement. So, I personally don't.
I mean, I don't do the fibs. Yeah, I mean, neither do I. So that's why I didn't know if you, since I know you also don't really do fibs, if you had some way of trying to measure that, if you're looking at like previous support levels, saying, okay, I expect a pullback to here, and then if we bounce here, then we're continuing the uptrend. I mean, I don't know. I don't know how to look at these charts.
Yeah, I don't really use inside fibs, meaning, if I'm taking a measured move, for example, right, this is your measured move. So from this bottom to this high, so you just kind of measure the fibs here. A lot of the time, people look for a 50% retracement of that move. So, that is around 301, 302. But if you're looking at something that has pivots to go off of, that's what I would go off of, right? So what I mean by that is I don't really care about these inside fibs. So if we pull up the the 0.618, the 0.786, all these fibs, they're inside the measured move. So something that's outside the measured move would be a fib extension, like the 1.618 extension. But and that's only if you are near all-time highs. If you have price action to the left to look at, that's generally what I use. But people who do use fibs for retracements and pullbacks, a lot of people do look at like a retracement of 50% of the move. But for me personally, I would just take this area and kind of focus on that as your main area to watch, simply because price has already proven that it's an important level, acting as resistance back in June, and then acting as an area where price bounced a little bit on August 9th, and then we're moving right back down to this area. We'll see if it holds again. So for those that use Fibonacci's, they're the inside fibs, they're looking for a 50% potential pullback of not a 50% drop, but a 50% pullback of that move. But I personally like to use pivots and previous resistance and support, just basic horizontal levels if there's price action to the left, meaning there's previous price action here. If we looked at something like, ExxonMobil, and we wanted to go to the weekly chart, you don't have a lot of price action here to go back on. You have a couple pivots. You've got this area here that you can watch, which is pretty much exactly where price is. But if we were way up here back in June when we topped out, you didn't really have anything to look back on if we broke out, right? We had this previous high back from 2014, which was essentially your all-time highs. So that's when you would use a fib extension. So here I measured the move from pretty much here. Just take all these off. And then I would just use the 1.618 extension. So that's when we were up here. That's when you don't have anything to the left. So if we were to continue to move up back in late May, early June, that's when you would say, okay, well, the 1.618 extension's way up here. That's how I would look at it. I mean, a lot of this is subjective. Fibs especially can be very subjective on where you measure the move, all of that. So that's kind of the way I use fibs, at least, which isn't right or wrong. That's just the way I use them.
Yeah, and that's what I like about being kind of chart dependent, or relying on technical analysis here, especially when we get into these volatile, unpredictable markets, is you're kind of by default, when you're going off the charts, data dependent, as the Fed would say, right? You're going off of the price action of today, of tomorrow, and not just making a prediction of okay, this is going to go up or down and sticking to it no matter what. And you do have some investors out there. I mean, most famously Warren Buffett, who says he doesn't look at charts. But if you are, then you kind of know what's going on a day-to-day basis. You can allow price action in real time to help determine how you make those decisions. So I do like that aspect of it, especially right here.
Yeah, and I mean every second you're getting new information, you're getting new data, and if you're someone who's just so stuck on a bias, or so stuck on this is going to happen, this isn't going to happen, and you're just ignoring what's happening in front of you, then that could be a problem down the road. But yeah, I mean, charts are just a way to kind of visualize market participation by everybody, and time it aligns with when something is really cheap fundamentally, or that type of thing. So a lot of the time you can use charts and fundamentals together. You don't want to be really bullish on Apple because the fundamentals, and be buying way outside of a Bollinger Band or something. It definitely does help to get an idea of what the landscape of price action is on whatever you're looking to trade or invest in.
Yeah, 100%. All right, let me turn this over to the chat, see if we've got any stocks we want to check out for a few minutes while we still got you. We've got about 10 minutes left. I know I got to let you go a few minutes early, so we'll let the chat throw some tickers out there real quick, and we'll let you go in the next couple minutes.
Cool.
Any setups particularly that have been particularly like interesting to you outside of the ones we've already talked about, obviously?
I mean, there's definitely setups that are breaking down. So, a setup is a setup, right? You just kind of, like, for example, here, Nvidia, you had this symmetrical triangle. Some people would call it kind of a bear pennant. And we finally are breaking down today. Generally, price will follow the way it breaks. So if, Nvidia continues to break down, then I could easily see this getting into the 164 to 167 area below. So I had this previous area 192 to 196, which is just this high from June, as a level above if we did break to the upside. So it's all conditional, right? If we break to the upside, then 192, 196 would have been your level. If we break to the downside, which we did, then 164, 167 would be your area to watch. But for this, you do have a gap below that's even lower, right around 158 for Nvidia. So, all in all, with price breaking down, a lot of the time you'll get a little bit of a pop, which is just really a retest of this previous, in this case, support zone, and then possibly continuation down. So if you were just looking at price action here, Nvidia looks like potentially one to take advantage of on the downside if this if this retests the previous support zone. So yeah,
Interesting. And we do have Nvidia reporting on Wednesday, correct?
Yeah, that's right. Yeah. So
Yep.
definitely throw the chart off a lot too. So
yeah.
But Nvidia.
So let's go.
Yeah.
I see Super Spacman wants Enphase, ENPH, and we'll go rapid fire here, Jake. We'll go through like 3 tickers here in the next 2 minutes, and then I'll let you go.
Yeah. I mean, Enphase is one that's breaking to new highs over the last couple months. So you definitely want to look for stocks that are breaking to new highs as the market's as the market still isn't at new highs. So this is clearly kind of leading the market. And yeah, I mean, I'm pretty bullish on solar in general. I know some people who work in the industry and they're always talking about Enphase, so it's definitely one that is showing some strength. On the weekly chart, you are kind of maybe just retesting the top of this, I guess you call it a flagpole here. But I mean, yeah, you're just kind of getting a little bit of consolidation. It's not a perfect flag. I'm just kind of trying to highlight that we're getting a little bit of price stabilizing a little bit after such a big move up in late July. So yeah, looks pretty good to me, especially if you look at the monthly chart breaking out.
Like you said, I mean, if you look at if you're buying stocks that are making new 52-week highs, a lot of times those stocks are showing a lot of strength and end up being good. It's kind of counterintuitive because I'm looking at Enphase, in the last 6 months, went from 133 to 284, is up more than 113%. I might sit here and think I'm not buying a stock that's up 100% over the last 6 months. But I think, a lot of studies have shown like that's actually a decent strategy sometimes is you buy the stocks that are strong and they continue to be strong. But I would just cautious. I mean, this stock's up 35% in the last month alone. Of course, a lot of that from the, bills passed, the Inflation Reduction Act and all these things. So, of course, I mean, if you love it long term, like you said, Jake, like you might buy it here, it pulls back 10%. And who cares if you're going to hold it for 10 years?
Yeah, I mean, the moving averages are continuing to move up, just pretty much in a classic uptrend at this point.
All right, how about we'll go to Walmart, WMT, and that'll be our last one for the day.
WMT.
This thing's kind of ugly.
Yeah, Walmart's kind of a crazy stock. I mean,
yeah, you'd expect it to not be volatile, right? Like we all know what Walmart does. They're not really out there like innovating a lot or doing any crazy things. They're gonna sell you what you need, and you can get everything you need in one shop, right? You can go grocery shopping and buy parts for your car. That's what Walmart is. I don't know why it's so volatile. Like we all know what it is.
Yeah, it definitely can have some crazy moves. I mean, I think it depends on what type of trader you are. If you're like a swing trader, you don't necessarily want to be, buying or participating in something where your 50 and your 20 are kind of flat here, and then you can see the 20s starting to decline, the 50s declining. So if you're looking for like a trending stock, this is definitely not trending to the upside unless you're looking at like the 200-week moving average. So, generally, if you're wanting to take advantage of trading something, you want to find something that's trending. And who knows, this would be more of like a swing trader or maybe even a position trader looking at the weekly moving averages. If you look at the daily moving averages, that's going to give you, a completely different look here. You can see here that we've got, the 50 and the 20-day moving averages starting to move up, but that's also because you just had this huge move up from earnings and you're starting to kind of see that curl to the upside. But, for now, possibly just a gap fill below the 200 days declining. So your longer term moving average is, moving down on the daily chart. And it's just a lot of chop here. I mean, literally just it looks like a damn seismograph or like a heart meter. You generally, or like maybe someone who's not doing too well with the heart meter, but just up, down, up, down, up, down. There's nothing that's really trending here. And anytime you have your moving averages flat like this, it's a lot of the time better to just find something that's trending than try to guess.
Yeah, tough looking at this chart. I mean, you can see just how, in April 2022, right, going back, what is that, 4 months ago, this thing was 160. Then it goes all the way down to 117. Now we're at 135. So crazy mover for a, quote unquote boring Dow stock like Walmart. I think when we went from 160 down to 118, there's probably a lot of people are like, oh shoot, I wish I should have bought that down there at 118. So I would just keep that in mind. Next time you see Walmart down 30 or 35% for whatever reason, it's probably usually going to come back at some point. But all right, Jake, I know you got to run a little bit early today, so I'll let you go here.
Awesome, man. Well, thank you for having me on as always. And definitely an interesting spot in the market right now. I think the monthly charts are definitely going to give us a little bit of data to go off of in the next week and a half or so. Especially for swing traders, position traders, if you're intraday trading, you don't care about the monthly or even really the weekly. But if you're trying to get an idea, a better idea of where maybe your longer term trends are, the close of the monthly chart coming up for August will definitely maybe give some clues going into the last quarter of the year.
Yeah, for sure, man. Couldn't agree more. I'm gonna go ahead and drop your Twitter in the chat. I believe that's what, Jake _ Wojastic.
2 underscores. So Jake _ Wojastic.
God, I'm gonna make it easier for the chat and drop the link. So all I gotta do is click it. But everyone give a follow to Jake on Twitter. Hey man, thanks again for coming on. We'll talk soon.
All right, thank you guys.
All right, y'all, that was Mr. Jake Wojastic from TrendSpider. Go ahead and give a follow on Twitter. And with that will be a wrap for us today. We've got about 2 minutes left. So, speak now or forever hold your peace. If you've got any tickers, charts, anything you would like to check out, I'll take the last couple minutes to just go through a brief rundown of the overall market, see where we stand here now at about 1 p.m., 3 hours left of the trading day. Your Qs are down about 2 1/10%, a little bit more than 2%. Your S&P 500 down a little bit more than 1.5%, and your Dow Industrial Average down a little bit less than 1.5%. So tech, certainly your laggard kind of weakness out there today. As far as individual sectors, the XLF, your Spider Select Fund for financials, down almost 2%. XLE, pretty much the same thing, but for energy is that right? Is it completely flat? Are we completely flat on the XLE? Yes, we are. Wow, look at that. The XLE is up 1 cent right now. 2 cents. Wow, so pretty flat day for energy there. Potentially some news that Saudi is going to cut its production. I don't really know. BTU having a strong day as well. Shout out St. Louis. All right, guys, that'll be a wrap for us today. Stock market movers starting up with Mitch right now. Do not go anywhere. This stream will redirect you automatically. See y'all tomorrow.